Roku and Netflix are streaming content pioneers that are benefiting from the convenience advantage streaming offers to viewers worldwide. But which one of these two pioneers is the better growth stock to buy for long-term investors? That's the question I'm going to answer in this video, comparing the two across several important financial categories, including revenue growth, cash flow improvement, returns on investor capital. I'm also going to share with you my proprietary discounted cash flow valuations for these two companies so you can see what I calculated as a fair value for these stocks. I'll also look at valuation on a forward price to earnings basis. I'll do all that in this relatively short video, so let's get started. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So looking at revenue growth going all the way back to 2017, Netflix has done a great job boosting its revenue from 11.7 billion all the way up over 40 billion in the most recent trailing 12-month period. Netflix, as a leader in the streaming content category, has done an incredible job withstanding competition and leading the industry during times of increasing competition. Netflix took an excellent approach to increasing competition and has led to great profits industry-wide for companies coming in. Everyone's profitability in the industry has been improving in recent years as a result of the leadership strategy of Netflix. Remember when everyone and their cousin wanted to start a streaming service in 2020? Rather than panicking, Netflix actually increased prices and then told the others in the industry that it's going to cut its content spending and it's going to crack down on account sharing. All of those were positives for investors, and the followers followed suit, making similar changes and thereby increasing profitability industry-wide. I love to see that kind of move from an industry leader. It's the opposite of what happened in the electric vehicle industry. Similarly, everyone and their cousin wanted to start an EV company during the pandemic because it was so popular. It was gaining so much investor capital. But as the leader, Tesla panicked. Instead of keeping prices leveled or even increasing prices or cutting production, it actually lowered prices, started a price war, and that's led to falling industry profitability. Many of the EV companies went bankrupt. Investors have lost so much money since the peak levels of that boom. So that's an example of an industry leader making moves that favors investors, and then another example of an industry leader making moves that hurts investors. Roku, meanwhile, has increased its revenue significantly. It's increased from 500 million in 2017 up to 4.3 billion in the most recent trailing 12-month period. That's good for a compounded annual growth rate of 34% compared to 18.6% for Netflix. Roku is entering into a new category. It's starting to manufacture its own TVs, manufacture and sell its own TVs. Prior to that, it was licensing its technology to other TV manufacturers, and its operating system is the number one operating system in the United States, in Mexico, in Canada. In every country that it enters, quickly it becomes the number one TV operating system. And trying the system myself and comparing it to other systems from LG and Sony, etc., Roku's operating system works so much better than what else is available. It's hands down the best TV operating system that I've tried. The next metric I wanted to compare these two on is returns on investor capital. Netflix, again, has done a great job here, increasing up to 21% its ROIC, up from 6.9% in 2017. And given the factors I highlighted earlier, I expect Netflix's ROIC to continue rising. I wouldn't be surprised if it rises over 30% in the next decade. Meanwhile, Roku is still negative at 11.9%, but improving quickly from negative 32% at the lows in 2022. During its peak, it reached a ROIC of 22.6%, but of course that was during the pandemic and everything was working right for Roku during the pandemic. People were locked down at home, consuming content more than usual. I don't expect Roku to reach or return to these levels for some time, and that's okay. Roku's ROIC potential has been altered by its endeavor to manufacture TVs. That's a capital intensive business model, requires lots of manufacturing capital, also inventory management, working capital. And so while it was on a trajectory improving its ROIC, I wouldn't be surprised if Roku's ROIC is more volatile in the near term while it ramps up this technology, this new offering to the market. And then once it gets mature in this category, then it can return to improvements in its ROIC. It might even continue improving as it is right now, but it might not. So the risks are elevated now for Roku because of that strategy. It could deliver higher returns in the long run, but it can also lower its returns in the long run, depending on how effective Roku is at rolling out this technology, using its competitive advantage in the operating system to also manufacture TVs. Let's see how it goes. Given Roku's highly effective management team, I've liked how the management team has managed the company over the previous 5 years. I'm reasonably confident that they can do a good job in this strategy. The operating cash flow to sales, they each, Roku and Netflix, done a good job in this. Starting at roughly the same point in 2015, Netflix has improved more rapidly, improving its operating cash flow to sales ratio up to 20%. Roku, meanwhile, has increased from 0.2 up to 7.3%. Again, I expect Netflix to do better on this metric over the next few years. Longer term, Roku has a chance at matching or surpassing Netflix, but for the near term, I expect Netflix to outperform Roku in this category. So now let's look at valuation. Netflix stock, I calculated its intrinsic value at $893 a share. Its current market price is $1,200 per share, 1,208 to be precise. It's trading near its 52-week high of 1,215. Roku, meanwhile, I calculated an intrinsic value per share of $94. The current market price is $74. Roku stock looks undervalued, while Netflix stock looks a little bit stretched at current market prices. Measuring by the forward price to earnings ratio, Roku is trading at less than one-third the valuation of Netflix. Netflix trading at a forward PE of 67, Roku trading at a forward PE of 19. Netflix deserves the premium valuation against Roku. Netflix is the better performing business. If they were trading at the same price, I would buy Netflix, no brainer, but they're not trading at the same price. Roku is a fraction of the price of Netflix. And so if I had to pick between these two, I would pick Roku as the better stock to buy for the long term. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.